Good evening and welcome back to the latest edition of the InvestTalk market analysis for the week ending May 13th, 2022. Appreciate you all tuning into this channel and subscribing, as well as subscribing to our podcast, InvestTalk. Now this week I'm going to title the video TerraUSD Sparks Contagion, and that's really what you saw. A lot of contagion, obviously NASDAQ tech really in a wreck. No easy way to say that. And I'm going to go over some of those charts. But I want to start off with this, the NYSE. That's my favorite index to follow because it's the broadest. And you can see here we did find some support right around the 2.5 retrace from this full move from the lows of 2020 to the highs of late last year. And we've had this really mini bear market. Now, it's not a full bear market if you're looking at the NYSE, the S&P, we're not down 20%, but certainly the NASDAQ, we are. And we continue to see this rotation out of growth and into value. So this is that longer term uptrend of growth outperforming value, but now really ever since the Fed started to talk about QE in the fall of last year, talk about tapering QE in the fall of last year, you saw this trend reverse in a big way. So this is something that I think is a longer term move, but you're going to get counter trend bounces, and you got a little bit of a bounce here today on Friday, but I don't think this holds. I don't think the low for growth to value holds for this year. I think you're going to continue to see a rotation, and that's just a general weakness that and downturns that you're seeing in the risky sectors. So we can just go straight to tech, XLK making new lows, and in a downtrend. And you're starting to see SMH is a good way to look at it. It's not just is it making lower highs or lower lows? What is the speed? And then see the distance between the moving averages. When this starts to kind of widen out and stay at these levels, that's just how a downtrend continues. If you want to see some potential for strength, you want those moving averages to start to condense a little, but they're actually widening out. So despite the bounce, which I think could continue for a week or two, we're in a downtrend in a lot of these names and just the market as a whole. Here is the S&P. And once again, this got a bounce. This little breakout area looked to be support. So not a shock there. But when it comes to the fibs, let's go to the fibs on the S&P. And what you'll see here is we clearly broke that 2.5 retrace and tested the 382. And usually when you're in a longer term uptrend, that 382 is pretty good support. So the question I think in my mind is, do we rally and roll back, find support at the 382, or do we go all the way down to the breakout area, 3,500? And my inclination is this is probably going to 3,500. Now, is it going tomorrow or next week or next month? Probably not. But by the fall, certainly possible. Certainly possible. Especially because the Fed is on a tightening cycle. And while inflation numbers did this week come in a bit lighter than expected, kind of flattening out of the rate of inflation, the Fed is still on this tightening path. And the bigger the bounce the market has, the more the Fed is apt to tighten, I think. And so I think that's why we are destined for those lower levels. Just a question of timing. And it's going to likely continue to be concentrated in those growthier names. And I'll show those. Here's Coinbase. Now that had a pretty nice rally today. But they were worried a bit about bankruptcy, they said in their recent earnings report. And then just what happened with Terra. I don't have a chart here, but basically a stable coin broke the buck in a big way. It had a huge sell-off in Luna. It's connected coin, and it's the first big blow up in the crypto space. And I think that's only going to continue. because liquidity conditions are tightening. And those are the ultimate, I call them Ponzi assets. It's all about liquidity. It's all about trust. It's all about who's the greater fool theory, the castle in the sky, however you want to put it. It's not on stable ground. And you can just look at all of the associated kind of crypto assets. Here's MicroStrategy, ARK, which obviously has a lot of exposure there. Now, what was interesting about ARK was you see here this big volume. It looks like record volume on Thursday. And that's kind of capitulation volume, at least in the near term. You saw that back here. See that move, and that brought a little bit of a bounce. So it was pretty weak. I think this could get a better bounce, maybe back up into the 50s. But still, this is a fund that's filled with Ponzi assets. And if you look at the flows into ARK, they actually are continuing, as opposed to people running for the exits. When people run for the exits, I think that's when there'll be a more durable bottom in the market overall. And it just shows that it'll show that a lot of those investors, retail investors that were renting exciting, interesting stocks without any discussion or thought about the fundamentals, they'll throw in the towel. And they haven't thrown in the towel yet. Near term, a little bit. But because of those fund flows that you're continue to see in there, definitely not quite yet. Now let's go shift over to the bond market real quick. I'm always watching SHY, short-term treasuries, and you're starting to get this little bull flag, uptrend in MACD, and it's starting to signal that, hey, the Fed is definitely not going to signal tighter policy. And their next phase is likely to be looser policy. Now, that doesn't have to be QE. Everyone thinks that's what they're going to return to. I don't think that's what they're going to return to. I just think they're going to back off on maybe the pace of tightening, saying maybe we won't do 50 basis points next meeting. Maybe it's only going to be 25. It's going to be 25 for the rest of the year, and just to kind of see how things go and change the forward guidance a bit. They've been aggressive in their forward guidance, and that allows them to back off a bit. And I think that's probably the next phase that you're seeing, going to see in that market. And then Jerome Powell, he was actually just confirmed for his second term as Fed chair, and he needed to show that he was going to fight inflation. I think that was a big part of this forward guidance, the pivot from Washington, putting pressure on him. Because remember, the first 6 months of the Biden presidency, it was all, they're fine with QE and the monetary policy situation. But as soon as inflation started to rear its ugly head and that started to become a political issue, that's when the Fed started to pivot. And so now that he can credibly say, I've been trying to fight inflation aggressively, I think it's kind of the green light to back off just a bit. And you're starting to see this a little bit in the 10-year, not quite as much in the short term, but you definitely had a down week for the 10-year rate for the first time in a while. Let's go to the weekly here. Yeah, look at this. I mean, what was last time? I guess you had a little tiny one a couple weeks ago, but this is just basically been powering higher for the past 2 months. And then I want to touch a little bit on the JNK. A lot of you talk about the high yield bond market, and overall, this is definitely a big sell-off this week, but not in a downtrend. But it's a little bit of a misnomer because the high yield bond market is so saturated with oil bonds, oil companies. And with oil being so strong, there's a huge section of the junk bond market that really isn't selling off because there's no worries about the oil companies, whether it's servicers, drillers, whatever, going default because their business is just fine. In fact, it's strengthening in a lot of ways. So I like to look at BKLN, which is the senior loan ETF. And this is basically floating rate debt, typically higher risk. And this is in a much bigger downturn. Okay. And something that you want to definitely keep an eye So I thought that was interesting. And then let me go to biotech. This is also kind of the ultimate Ponzi sector, and that's all about financing, uh, raising capital, and that continues to be in a strong, durable downtrend. And as long as that remains that way, then I think we're in a bear market, unfortunately. But that doesn't mean there aren't opportunities. Look at XLE, just as strong as could be, really. I mean, there's some contagion this week, and that's why I said kind of TerraUSD sparks contagion. There was some sell-offs in, XLB, so basic materials, although it's still not making a lower low, still relatively strong compared to the overall market. So let's go to XLB to the SPY, and you're seeing that remaining strong. So there are pockets of strength. XLU that found support here right around the 100-day moving average. So kind of non-cyclical sectors, energy, commodities, those are doing quite well. Let's look XLP. Look at that strength there. So it just shows you sector rotation is very important in this market. Now, gold did sell off. That was a big part of the contagion. But overall, it's still not in a downtrend, still making a series of higher highs and higher lows. Now GDX, definitely more of a sell-off, but not breaking any major lows. So while definitely concerning, hasn't changed kind of the longer-term bullish picture. Maybe turned it less bullish, but overall, I think relatively bullish. And then lastly, let's go to the transports. Another area that has not broken any major support here, and something that I'm watching for a bigger indicator that a recession is in the offing. I don't think we're going to go into recession at this point, but definitely not ruling it out. So odds are still better that we avoid it, but a lot depends on the path of policy. And what happens in China. I think that's being under discussed, the shutdowns in Shanghai. We are seeing the credit impulse tick higher on China in the near term. So lifting of some of those restrictions, etc. And something where I think we could also get some near-term tailwinds for that credit impulse improving. So something I'm definitely watching. But I think that about does it for this week. It was a very interesting week, exciting. If you were in crypto, definitely not. But we've definitely avoided that sector, and I think for a while. And what was interesting is Janet Yellen basically came out into Congress and urged them to act on the stablecoin side and try to stabilize that market. And you have Tether, that's another potential contagion spark that could be around the corner. Who knows when that kind of falls apart? Everyone kind of knows it's kind of a fraud. It's just a matter of when does the market wake up to that, and when does that all break? Something that's I think could be the next spark for another sell-off, but that might not be a month, 2, 3 months away. So near term, I'm expecting a bounce, but we're still in a bear market. Thank you all for tuning in. A reminder that the contents of this video are provided for educational purposes only, should not be construed as a recommendation to buy or sell a security or to participate in an investment strategy. The views are my own and do not represent those of KPP Financial and those associated. Thank you and have a wonderful weekend.